Hey everyone, and welcome back for another deep dive with us. We love to really get into the research, and today we're going to be unpacking some academic work that looks at the impact of Wall Street bets on the stock market.
Oh, yeah.
That Reddit forum that everyone's always talking about.
Yeah.
We're going to be looking at excerpts from this paper. It's called Social Network, Attention-Herding, Sentiment, and Markets.
Interesting.
It's by Cheng Huang and Pauline Shum-Nolan. And get this. We're going to be going beyond the meme stock craze.
Okay.
We're going to be diving into whether all of that online chatter actually moves markets.
Yeah.
And how a new method of sentiment analysis is changing the whole dumb money story.
It really is fascinating. This research builds upon previous work in the field, but it introduces a novel method for understanding how attention and sentiment on WSB might be influencing stock prices.
Thank you for tuning in to Quantopian's Quant Radio, your AI-driven podcast exploring everything related to quantitative finance. If you enjoy this episode, don't forget to like and subscribe to stay updated on future releases. For more quant-focused content, join us at community.quantopian.com. There you can explore a wealth of resources, connect with fellow quants, engage in insightful discussions, and enhance your skills through our extensive range of online courses. Quant Radio is intended to help people develop their knowledge and skills in quant finance. This podcast is not intended to provide investment advice. And now, back to the episode.
We all remember the GameStop short squeeze back in early 2021. Right?
Oh, yeah. Of course. That was big.
That was when Wall Street bets really exploded into the public consciousness.
Absolutely. That event really highlighted the potential power of retail investors and social media.
For sure.
But as you mentioned, this research goes deeper, exploring the mechanics behind how WSB attention might translate into actual market movements.
Okay, so let's get into the nitty-gritty. How did the researchers actually figure out what people on WSB were feeling about different stocks? Did they just read through thousands of posts?
That's where it gets really interesting. They utilized a machine learning model called BERT, developed by Google, to analyze the sentiment expressed in WSB posts. What sets BERT apart is its ability to interpret context, which is a significant improvement over earlier methods that just looked at individual words.
You could tell if someone was being sarcastic, for example?
Precisely. BERT was trained on a vast data set of investor comments, enabling it to understand the nuances of financial language and identify subtle cues like sarcasm.
That's impressive. All right, so they had this powerful tool to gauge sentiment. Now, the big question is, does all the talk on WSB translate into actual market action?
That's what the researchers wanted to find out. To test this, they did two main things. First, they created what they called monthly attention portfolios.
Interesting.
These portfolios were based on the top 3 most discussed stocks on WSB each month, specifically those with positive sentiment.
Got it.
Basically, they were tracking the stocks the WSB crowd was most bullish on.
These portfolios sound promising, but did they actually deliver consistent returns?
They did. Table 1 in the paper shows these portfolios generated significantly high returns. We're talking returns that far exceeded what you'd expect from random market fluctuations. To put it into perspective, they were achieving an alpha of around 2% per month, which is a significant outperformance compared to the market as a whole.
Wow, 2% per month is huge.
It is.
So it seems like there's something to this WSB effect.
Yeah.
But is this just a long-term trend, or does it hold up on a day-to-day basis? If a stock suddenly gets a lot of buzz on WSB, does the price actually jump?
That's the second thing they looked at, what they termed daily attention events.
Okay.
They compared these events to changes in user holdings on the Robinhood trading app using data from RobinTrack, which tracks Robinhood user activity.
That's clever. Robinhood is well known for having a large user base of retail investors, many of whom are very active.
Exactly. And what they found was a strong correlation between WSB attention and trading activity on Robinhood, especially for stocks with positive sentiment on WSB.
Gotcha.
Figure 3 in their paper visualizes this beautifully. You can actually see a spike in the number of Robinhood users holding a stock immediately after it receives a wave of positive attention on WSB.
So people are literally seeing a stock mentioned positively on WSB and then jumping on their phones to buy it.
It seems that way.
Almost like a self-fulfilling prophecy.
It certainly appears that way,
Yeah.
and this is where things get even more interesting because it challenges the common perception of WSB as being all about dumb money.
Yeah, you're right. It does challenge that dumb money narrative. You often hear people dismiss WSB as just a bunch of amateurs gambling with meme stocks.
Yeah.
However, this research found no evidence of a significant price reversal after those daily attention events.
Interesting.
In other words, the stocks they looked at continued to perform well even after that initial WSB-fueled surge subsided.
That's fascinating. It seems to contradict a lot of what we hear about WSB. Why do you think that is?
There are a couple of possible explanations. First, remember that this study focused specifically on stocks with positive sentiment,
Okay.
which might be a more accurate reflection of genuine interest,
Right.
as opposed to just short-lived hype.
Second, their approach, which involved directly measuring retail attention and using this advanced sentiment analysis with BERT, sets it apart from prior studies that might not have captured the same level of nuance.
So maybe WSB is more than just a random collection of memes and inside jokes.
Exactly. It suggests a level of collective wisdom that shouldn't be overlooked.
Okay, but what about those influencers we hear so much about? The big personalities with massive followings. Do they exert any real influence on WSB?
That's a great question. The researchers delved into that as well. They defined influencers as the top 5% of users who consistently receive the most upvotes on their posts.
Okay.
Essentially, they were looking for the thought leaders who carried the most weight on the platform.
So did these influencers have some kind of Midas touch? Could they single-handedly move the market?
Well, not exactly. It's more nuanced than that. What they found was that influencers tended to jump on stocks after they had already started to climb. They seem to be providing what the researchers call an authoritative blessing to trends that were already in motion.
Interesting. So they weren't necessarily starting the fires, but more like fanning the flames.
A perfect analogy. But here's where it gets really fascinating. The sentiment expressed by an influencer seemed to have a real impact.
You mean whether they were bullish or bearish on a particular stock?
Precisely. Figure 6 in the paper illustrates this beautifully. Stocks endorsed negatively by an influencer tended to reverse their gains, while those given a positive nod by an influencer continued to climb.
Wow. So even within a platform as seemingly chaotic as WSB, certain individuals do have the power to influence market behavior.
It would appear so. It speaks to the dynamics of social influence and how they can play out even in the financial markets.
Okay. So we've established that WSB can, in some cases, move markets. But how does this research fit into the bigger picture? What are the broader implications for investors and the financial world as a whole?
That's an important question. This research could signal a paradigm shift in how we think about market information. Traditionally, we've relied on financial news outlets, analyst reports, and other institutional sources for market insights.
Right, we look to the experts for guidance.
Exactly. But this study suggests that social media sentiment, even from non-experts, can play a significant role. It challenges the notion that traditional sources of information have a monopoly on market-moving insights.
So does this mean we should all be scouring Reddit for stock tips?
Not necessarily. It's important to remember that social media is just one piece of the puzzle. While it can be a valuable source of information and sentiment, it shouldn't be your only source. Due diligence, a sound investment strategy, and consulting with financial advisors are still crucial.
Good point. So don't abandon your financial advisor just yet.
Right.
But maybe keep an eye on those Reddit trends just in case.
Absolutely. This research underscores that valuable information can come from unexpected places.
Speaking of unexpected places, let's go back to those influencers for a moment. Their impact on WSB is quite remarkable.
Indeed. Their ability to amplify both positive and negative sentiment is fascinating. It suggests that social media platforms are becoming incubators for a new type of financial thought leader.
So it's not just about the sheer number of users on a platform, but also about who those users are listening to.
Precisely. And this raises important questions about the nature of influence itself. How do these individuals gain their authority? Is it their track record, their charisma, their ability to tap into the collective mood of the community?
That's a great question. Unfortunately, this study doesn't provide all the answers, but it certainly gives us a lot to think about.
It does, and it highlights that even in a domain as seemingly rational as finance, human behavior still plays a crucial role. It's not just about the numbers.
Okay, we've covered a lot of ground today. WSB, sentiment analysis influencers, the dumb money narrative. What are the key takeaways for our listeners?
There are a few important points to remember. First, social media and platforms like WSB can have a tangible impact on the stock market. It's not just noise. Second, we need to reconsider that dumb money label often attached to retail investors.
Right.
This research suggests that the collective wisdom of the crowd can sometimes lead to impressive returns. We can't underestimate the power of influencers in this new landscape. Their endorsements, especially those with positive sentiment, can amplify existing trends and potentially influence market behavior.
So if you see an influencer pumping a stock on WSB, maybe do a little digging. It could be worth your while. But as we said earlier, don't forget to do your own research as well.
Absolutely.
This has been a fascinating deep dive into Wall Street bets and the world of online sentiment. Any final thoughts for our listeners before we wrap things up?
If social media can influence stock prices, what other aspects of our lives are being shaped by these online forces? Think about the impact on things like politics, consumer behavior, even social movements. It's a fascinating area to explore.
That's a great point. It seems like the lines between the online world and the real world are becoming more and more blurred.
Indeed. And as we become more interconnected and reliant on social media, understanding these dynamics will become increasingly important.
Well, on that note, thanks for joining us on this deep dive into the fascinating world of Wall Street bets, sentiment analysis, and the evolving landscape of financial markets.
It's been a pleasure exploring this topic with you. Until next time, stay curious.